This podcast is brought to you by Customplan Financial Advisors, Inc., an independent insurance managing general agency in Canada. Financialpodcast.ca was developed with one goal in mind: to educate Canadians on important topics that affect their financial well-being and make it readily available to all. We welcome you to plug in and learn with us. If you have questions, please email us at contact@financialpodcast.ca.
Good day, everyone. Thank you for joining us at Financial Podcast. My name is Darlene, and I'm your host. A big part of insurance is a part that many of us don't see, and that's underwriting. I'd always imagined an underwriter as someone who spends a lot of time on their computers looking at facts and figures, trying to make decisions about insurance policies. And to me, it's a bit of a black hole. So today we are so excited to have someone who has a great deal of experience in underwriting and can demystify it for us. Peter Speers is here with us today, and Peter has been doing this for many years and has led the ship in this department for some big and well-known companies. Thank you, Peter, for joining us today. Can you share a little bit about your background in underwriting and how you got into this field?
Absolutely. Thanks for inviting me, Darlene. I appreciate that. I began my underwriting career at Great-West Life in the late 80s. From there, I went to Crown Life in the mid-90s and oversaw underwriting for that company. And from there, I went to Canada Life had actually purchased those assets of Crown Life. So I then oversaw underwriting at Canada Life, and in 2001, I went over to RBC, oversaw high net worth underwriting, so that was PPI and all the high net worth business. From there, I oversaw all of underwriting at RBC as well as new business, and in 2010, I began consulting. So what I do today is I oversee expert witness cases from an underwriting perspective, as well as I assist advisors, MGAs, and also reinsurers and insurance companies. I perform audits for the latter. And I'm in partnership with a few other companies as well as individuals with a new product that is a high-risk product where we, for life insurance, we assess the risk and we're able to offer most cases with medical exclusion riders, which is very, very unique for life insurance. Not for DI and CI, certainly, but for life insurance it is.
Wow, that's quite an extensive career. I'm intrigued by the expert witness cases.
Yeah, that's lots of fun. I've done over 80 cases, and I've been working on that for over 20 years.
Wow. Well, maybe if we have time, we'll get into that a little bit later. But for those of us that don't know exactly, can you give us an overview of what the role of the underwriter is when it does come to insurance policies?
Sure. What the underwriter, in effect, does is they assess the risk for individuals. And that's when we speak of risk, we're really talking about financial risk, lifestyle, avocation, travel, occupation, and medical. And what the underwriter always has to think of is what makes sense. There are some underwriters that strictly assess risk according to the book, and the book being the manual, the underwriting manual. I'm not really interested in the manual so much as what makes sense, because there are many manuals that really don't encompass all of the different issues that an individual might experience. And you really have to be able to try and work all of these different situations according to that individual. So we always have to be careful that when we receive communication from underwriting, that it makes sense, just as they're supposed to review the material, the information, and try to make sense out of that. The underwriter, in effect, is a gatekeeper, so they do hold the key to the approval of the individual as well as the profitability of the insurance company.
It's a lot of things to weigh. when you're doing the underwriting then? It sounds complex. But one of the things that I realized when I was doing research for this, so just to give our listeners a bit of a background, I'm a fan of many different types of stories, and murder mysteries are one of them. And sometimes the victim in the story has had this massive life insurance policy placed on them by someone who may or may not be closely connected to them in their lives. So when I was doing research for this, I saw that one of the elements of an underwriter is that they have to take into consideration if the person has an insurable interest in the insured. Now, sadly, this will dash the hopes of many an aspiring author, but can you tell us what an insurable interest is?
Sure. For insurance, we need to be able to substantiate the proof that there is an insurable interest, and that's to protect both the insured and the insurer from insurance fraud. There are situations where individuals have tried, and it's very rare, but there have been certain individuals who have proven to fraudulently apply for insurance. And there were some cases, in fact, with one insurance company I worked with back in the 1920s, we had approved a number of cases in Chicago, Illinois, in the United States. And there were a number of deaths over a very short period of time. So we had an investigation performed, and we found that it was part of the mafia, and they were insuring people and then murdering them and receiving the death benefits. Now, that's a worst case scenario, and it is very rare. It is very rare, but it's still very plausible. So insurable interest, really what we're trying to do is we're trying to protect the financial interest of the individuals who are the beneficiaries of the insurance policy, so that they're currently receiving something in the form of financial or emotional impact that will try to qualify from an eligibility perspective, as in the amount of coverage that's applicable to them, given what would represent to them a loss in the case of the insured passing away. And that can be for either personal or business. And when we look at business insurance as an example over the last 30 years, it's increased substantially, the number of applications as well as the face amounts. And for business insurance, of course, we're talking about buy, sell, and key person in particular. And from a risk management perspective for corporations, that's extremely important.
I can imagine. I would expect that when it comes to the business, that would be harder to determine who has an insurable interest, would it not?
That's a good question. From a buy-sell perspective, it's really just for the owners. So, I mean, this can be for disability insurance. This can be for critical illness as well, and life insurance. So if there are three partners, for instance, each own 33% of the corporation or the company, the business entity, and the value of that company is $10 million, then each should be insurable for $3.33 million.
Yeah, okay.
And for key person, it's a good point with key person because you have to substantiate what the loss would be to the company in the situation where that individual were to pass away for life insurance, were to become disabled for disability insurance, or what the risk of, from a critical illness perspective, would be to the company.
Wow. Okay. Well, that all makes sense. But when it gets to looking at these cases, whether it's business or personal, outside of the insurable interest, I noticed that part of the process for an underwriter is to look at the financial ability of the applicant. So isn't this something that the insurance advisor would have determined at the point of taking the application? And what factors do you look at when you do this?
Yes, I cannot emphasize enough the importance of the advisor doing their homework. And when we talk about homework, it's not just getting the financial statements and figuring out exactly what coverage amount the individual should have in place, but it's also performing Google searches. So that goes above and beyond financial, but it could certainly include financial underwriting. You can bet an underwriter is going to check the client on Google and find out if there are any issues. And that can be That can be positive, that can be negative. But don't be surprised, do not be surprised if an underwriter finds something on Google that you didn't look up. That's something that's really come up in the last 5 to 10 years in particular. And underwriters ordinarily will probably check Google on any amounts $1 million above. So for financial underwriting, you're really talking about tax returns for personal insurance, and in some situations, depending on, and this is all dependent upon what the face amount is requested, and that varies by product. And what I mean by product is life insurance, disability, critical illness, in some situations, maybe long-term care. So the higher the face amounts, the more likely it would be that full financial documentation would be required. So tax returns, not tax assessments. Tax assessments only give overall income. It doesn't break down what was earned and what was not earned. Financial statements of corporations, if you're looking at ensuring the individual's net worth upon death, how much is going to be payable tax-wise, and the financial statements, full financial statements. So you want the assets, liabilities. You want the revenue, you want the expenses, you want the notes, you want the accountant's letter as well. And I have seen a couple of cases where the accountants, and they tend to be very, very diplomatic in the opening page of the financial statements, saying that they've reviewed the information. I have seen a couple of cases, only a couple, and that's out of tens and tens of thousands of applications, where the accountant was kind of giving a hint saying that they weren't sure about the information or something relative to that. They weren't sure. They couldn't necessarily trust the information coming to them. And in one of those situations, it was actually an individual in South Africa. Once the policy was placed, not with the company that I was with, but with 3 other insurance companies. And what they found was that she was stating, or the beneficiary was stating that she was dead, and it was her twin sister who was actually the beneficiary. There was no twin sister. When the other insurance companies completed their investigation, the individual had killed off herself, in effect, and she was claiming claim benefits. So 3 insurance companies were asking us why we declined, and we just said because of the information obtained on the financial statements from the accountant.
Wow. That's quite a story. The lengths that some people will go to. Holy cow.
Well, yeah, and I mean, that's what the underwriter has to do. It has to protect the insurance company, the reputation of the insurance company, the reputation of the advisor, of the MGA, the office themselves. You know, it's a responsibility that's very, very important. And advisors have those same responsibilities and accountability.
Well, you're making it sound way more glamorous than what I originally thought. So,
well, don't forget. I mean, these are off. You know, it's very, very rare when you come upon these, but I have seen these.
Oh, I can imagine. So not only are you looking at financial factors in this, but you're also looking at the medical history of the application. So how do you determine when additional information is required, and how do you determine whether to approve or deny an application?
Yeah, that's a very all-encompassing question. I mean, for every insurance application applied for, there are routine requirements necessary. So when we talk about routine requirements, they go by age of the individual and the amount of coverage being applied for. You know, I mean, if it's a $10 million case on a 60-year-old, you might be looking at a doctor's report. You might be looking at vitals. Some companies still parameds, I guess. A lot of companies have reduced that to vitals because they're so much more simple to obtain. With the vitals, you've just got the build that's weighed and measured. You've got the blood pressure, the pulse, and really that's all. Whereas with the paramedical, you're just re-asking all of the medical questions, but you do tend to have a nurse asking those questions, so they have a higher level of understanding of what those questions mean. You have a blood test, a urine test. You might also have an inspection report. which is just a third party who goes and does a routine investigation of the individual through Google. So they might look up whether or not there's any history of bankruptcy, travel. They might talk to an accountant if it's an insurance, or if it's a corporation the individual is part owner of, possibly neighbors. We're getting more out of inspection reports more and more, though. They also do a credit check to see how the person is able to pay off expenses. Motor vehicle report is a possibility as well. It's very rare when we'll ever take action on adverse driving record, just because it is so rare. You don't see that very often. Sometimes you just get a gut feel, and I know that I can't substantiate this. You just get a gut feel when you're reading through a case, some of the requirements. You get a gut feel that there's something there, and that could be any number of things. Something else it could be medical, it could be financial, it could be personal, number of things. Something else that we should mention is the Medical Information Bureau, and it's called MIB. So every insurance company puts the client through MIB, which means that if there are any codes that are on that individual, then it's applied through MIB. So if somebody has a history of diabetes and you decision the case, no matter whether it's a decline or a standard approval or approval with extra rating, that insurance company will code that individual's diabetes and send it to MIB. And when that client then applies to another insurance company, that other insurance company will see that other company's MIB code. So an insurance company is not allowed to make their underwriting decision based on an MIB code. They have to. They don't have a choice. They have to request the information necessary to be able to substantiate that code. They cannot make the decision off of the MIB code itself.
So how would you, so in the case of diabetes, let's say that somebody doesn't declare that they have diabetes when they go to the second insurance company to apply for insurance, and you see that there's an MIB code for diabetes. How do you go about asking the right questions so they can let you know about the diabetes?
Yeah, that's a question we didn't go over.
No, it isn't. Sorry, it just came up as you were talking.
No. I like the question because, first of all, there's non-disclosure. Okay, so that's a key from an underwriting perspective. And when we talk about non-disclosure, that just means somebody lied to us. Maybe they meant to, maybe they didn't. But nevertheless, there was misrepresentation on the application. So the underwriter would not ask the advisor nor the client about that information. And they really can't because it's confidential. They receive the information through a confidential means, which is the Medical Information Bureau. So if it was diabetes, then we would request a doctor's report to confirm what the individual's history is. But that's a very good point that everybody has to be very, very aware of, is that full disclosure, and we're going to get into this later on, full disclosure is of such great importance, not just from that client's perspective, but also from the advisor's reputation.
Yeah, because if they continue on with an application that had been previously declined, it would be impactful, I would imagine.
Exactly.
Yeah.
Right.
So you've been in the industry a long time. You mentioned earlier that you've worked for a lot of, or not a lot, but a couple of different large insurance companies. Are there any major differences when underwriting for these companies, like in their policies, or is it fairly standard?
Yeah, from a consistency perspective, I mean, I've seen a lot of advisors where they think, well, it's one of two things. One is that they're going for price. Number two is they're going for their best offer, where they apply to 3 or 4. It's been as high as 3 or 4. I remember one case where it was 5 different insurance companies asking for the same amount of coverage. And insurance companies tend to be very, very careful in proceeding with cases such as that. The reason being is that the average case that goes through new business and underwriting is about $1,500 or more. So that can be very, very costly, especially when we talk about wastage, which we're going to talk about later. So what I would say is that don't apply to any more than one insurance company at one time, because some insurance companies will not underwrite a case that's going to more than one insurance company at the same time. They just won't touch it. You may find a couple of insurance companies who do that, but it's become much more rare than it used to. So the major difference is, from an underwriting perspective, in my opinion, is the underwriter themselves. And the reason why I say that is that some underwriters, and we spoke about this at the beginning, some underwriters are very, very good at being able to use their whole brain in underwriting, so they take everything into consideration. They don't just read the manual. They can be very communicative, some underwriters, not all, but some can be very communicative and help the advisor in being able to process the application. So you have to be careful with respect to the company you do business with and the underwriters who are within that company. Now, ordinarily, with insurance companies, they won't necessarily allow you to speak with the underwriter, but you can forward emails. The reason why insurance companies don't particularly like their underwriters speaking with advisors is that it can be very costly from a time service perspective, but mostly a human resource perspective. They have very, very tough budgets that they have to adhere to on a yearly basis. So they require their underwriters to provide a certain productivity on a yearly basis. And productivity, I mean number of decisions, new business cases observed throughout the year, as well as decisions made throughout the year. And the more that they communicate with others outside of the process, the less likely it is that they'll be able to achieve those numbers. So, and some reinsurers are a little bit easier in some situations on particular medical issues than others. Some reinsurers tend to be more aggressive than other reinsurers. So it's really dependent upon working with an underwriter, and the more premium you do, the better with particular insurance companies, where they may allow, if you're doing a certain amount of premium with them, they may allow a one-on-one relationship between one particular underwriter and one particular advisor.
Wow. Well, that's good, but I can see why there would be the hesitation for that too, right?
Yeah, it goes both ways. But again, like I know some very, very top advisors throughout Canada who can do, $100,000 plus a premium with any one particular insurance company. Those individuals will get one-on-one, just because underwriting relationships are so important in processing your business. And sometimes that can make the difference between an approval and a not proceeded with, or a decline, or a not taken.
Okay. I can see how that could work in that area as well. So when we're talking about underwriting, about how long does the process take?
Well, that can take anywhere from days to years. And it's really dependent upon the case, the situation, the circumstances. So when you've got a smaller face amount with a younger individual, that can go in and out very, very quickly. With underwriting processing today, it's so much better, stronger overall than it ever used to be. But when you've got an older age, higher face amount, or an individual who has risk issues, then that can go on for a long period of time. If somebody just recently had an aneurysm or a heart attack, or a higher stage cancer, and they're waiting additional testing, then those tests may have to be performed prior to underwriting reconsidering the case. And especially with COVID right now, and I'm sure everybody would agree with this, they're noticing just that very same thing, that people's surgeries are being postponed. They're not able to see their attending physician outside of an Outlook, or Zoom or a phone call. So it makes it much, much tougher for the advisor and for the clients today than it was previously. And hopefully with the virus, we're going to be done with it within the next year or so, hopefully. So that won't matter as much.
Mm-hmm. But right now it's taking that time. That's not something I'd ever considered too, is that these delayed procedures would impact somebody's insurance coverage.
Oh, it most certainly does. And that's very, very risky from the client's perspective. And it's really sad because everybody should have the ability to be able to be assessed on a timely basis. And they don't all have that, not right now with the situation with the virus, COVID.
Right. That's unfortunate. And hopefully will be resolved, before too long. Hopefully it doesn't take a year. But there were a few things you had also wanted to talk about as well. And so what I'm going to do is I'm just going to hand the mic over to you. And hopefully at the end of it, if you can, share with us some of your expert witness cases, that I think that would just be fun.
Okay. Well, we'll see how much time we've got. Okay. So to begin with the cover letter. Now the cover letter should go with the application in those situations where it's deemed necessary. And when I say deemed necessary, I mean if there are gaps in the application or things that need to be explained that goes above and beyond what's in the application. The application, I know that some of them are over 40 pages. So, I mean, there's apologies for that. But from a legal compliance perspective, authorization, insurance companies do not have a choice. Legal has made that very, very clear. And that has anything and everything to do with any possible litigation going forward. So they can't make any kind of special examples where they'll allow certain situations and not others. You're setting precedent, and you can't afford to do that in insurance. So, I mean, when we look at the application, it needs to be fully completed. If it's not fully completed, that's the first thing that really irritates an underwriter, because then they have to request the answers to all of those questions. And we've seen some applications where at least half of the questions are not completed. That is so important to complete the entire application. And even though a paramedical may be required, I think it always makes sense to complete the medical portion, or it's called non-medical, but it really is the medical portion of the application. Because when you're reviewing the application with the client, when they complete it, you need to be able to set expectation. I've seen so many not taken cases because the client wasn't aware something was going to come up and they took offense to it. And there's egos with a lot of clients who aren't willing to admit to certain things. And if you don't set the expectation for an exclusion rider, the possibility of an extra rating, et cetera, then I've seen so many clients who are so upset. So it's always good to complete the full application, full disclosure, and please make it as clear and concise as possible. If there's any additional details to any of the yes answers in the application, please complete that, add it into the cover letter. And when we talk about, how do we know where you do require additional information? And it goes back to common sense. You have to ask yourself, do you think that there's a risk here from a mortality, morbidity perspective? If you do think there is the possibility, or it requires further explanation because there wasn't enough space to complete the information, then by all means add it in. If there was a bankruptcy, for instance, that may have occurred 10 years ago or 2 years ago, what were the circumstances? Is the individual off of the probationary period? Just anything that can add to the application so that the underwriter doesn't have to ask the additional questions. And they'll be so impressed. They are so impressed when somebody actually uses their common sense and tries to give the answers that the underwriter may not have assumed they would even try to do. If there's any questionnaires, whether they're medical, financial, avocation, travel, lifestyle, anything, complete those and send those in with the application as well. And again, you just impress the underwriter so much. And that's very, very important, the relationship between the underwriter and the advisor.
Well, you know what, and I bet you that's not something a lot of people would have considered, something as simple as filling out the entire application and anticipating questions.
Oh, yeah. In fact, that's a good point, and I should raise this. The example I'm going to give is for disability insurance. We had done a study back in, I think it was 2002, something like that, and it really hasn't changed much since then. And we were looking for what piece of evidence took the longest to receive. And never once have I heard what the answer was, what the correct answer was. Everybody says a doctor's report or financial statements, and that's ordinarily correct. But for disability insurance, it's email replies. And that kind of blows you away. Why does it take so long to get an answer to a question? I don't know.
That is a curiosity.
Well, it is. And it just kind of blows the underwriter's mind away because they can't understand. They think it's important to get this coverage decisioned. And quite often, we're just waiting for additional information.
And this was a study done in 2002, you said?
Yeah, 2002.
Do you know, has there been another one since then?
Not that I'm aware of.
Okay, because it'd be...
That was just for disability insurance. Disability insurance tends to take much longer to underwrite than life insurance on average, just because there's so many additional issues with respect to the coverage and risks. And there's a much, much higher non-disclosure with disability insurance. Disability insurance, there's the most non-disclosure, followed by critical illness, and then life insurance.
Wow, that's it's startling, honestly, that something as simple as just replying to an email. But that's enlightening. All right. So just so I'm clear on the cover letter, because I'm not really in the insurance industry, I just talk to people who are associated with it. When it comes to the cover letter, is that like a synopsis of the application and it provides additional information? I'm not entirely clear on that.
Yeah, it's not, well, I mean, it's not really a synopsis, I guess, and it's not necessary for every case. And I mean, I don't like adjectives. So it's not to impress upon the underwriter your knowledge of the English language or that this person goes to church 3 times a week. It's just to differentiate for the underwriter what might be a problem and what might not be a problem. And if it is a problem, is there a particular doctor that might have more information or a test that might be coming sooner than later? With respect to travel, as an example, where does the person travel to, and what are the medical facilities that are available in that country? What parts of the country? It can go above and beyond the questionnaires as well.
Okay, so it's just adding additional information that might
Correct.
be.
But it quite often it can make such a big difference.
Yeah.
Such a big difference.
Yeah. Okay, I get it now. All right. So besides the cover letter, was there anything else that you wanted to let our listeners know about when it comes to underwriting?
Yeah, I think wastage is very important. I mean, when we were talking earlier about the average case costing over $1,500 from an insurance company perspective, I don't know what the cost is for an MGA, but I'm sure it's got to be, I don't know, probably pretty close to $1,000, if not that, very close anyways. And wastage really encompasses the number of declines, postpones, not proceeded with, and not takens. And for life insurance, that number amounts to roughly 25%. So decline for life insurance alone is right around 9%, just for life insurance. And sometimes, depending on how something is phrased or worded, it can cause red flags. And in effect, what you do is you blackmark that case for that information that was given. And sometimes that information was not correctly interpreted, either by the advisor, possibly the doctor, possibly the underwriter. So it's extremely important to read through a decision, the reasons or cause for that decision. Sometimes it's maybe due to confidential information. And in that situation, the information, the reasons can be sent to the attending physician, and it needs to be properly discussed, and it has to make sense. I don't see every case where the underwriting decision makes sense, in my opinion. I'm just trying to say, be wary of what you receive, the feedback you receive. I mean, the majority of the time, most certainly is correct, but there are some situations where you really have to say, does this make sense?
Right. Honestly, I think that comes down to a lot of different professions too. You know, when you're looking at something holistically, does it make sense? So it's good to know, because you are certainly changing my impression of underwriters. You know, it's fascinating to me that you do have to take so many things into consideration. I mean, you talked before about doing Google searches. I wouldn't have imagined that that's something that would have been done, but it makes so much sense. You know, maybe even social media, I'm not sure, but you know, there's a wide range of opportunity for you to look at the whole person.
Correct.
So it's fascinating. So can we now get to your expert witness cases?
I just got one more point that I really wanted to communicate, and that is communication.
Oh, yeah, right.
So from a communication perspective, and so many people really underestimate the importance, it's your correspondence, knowing your audience. So it's speaking on the terms of, when you give a presentation, for instance, I had asked you, Darlene, as an example, a perfect example of who is the audience going to be listening to this podcast, because I need to know. I don't know what level to take the presentation unless I know the level of the audience. When you're talking about insurance from an advisor's perspective, you're talking about new business and the underwriter. So you need to know the audience and what their expectations are. And they require clear, concise information. When emails are being sent, misinterpretation is a horrible thing that we all see much, much too often. And I saw an awful lot of it because I oversaw underwriting a new business. And on a regular basis, a number of times on a daily basis, I would see people coming to me complaining about how somebody in new business with the MGA, the insurance office, the advisor, the agent, the broker, the producer, how they would have communicated something to them and they took offense to it. And I've seen so many in tears over the years. I had to have a box of Kleenex in my office, and that got used up. I went through at least one box every 2 weeks just because people would be so upset. Now, sometimes they were correct in being upset, and then I would have to contact the advisor, the MGA's office, whoever. But many, many times, the majority of the time, I read the communication differently than the way that they read it.
Well, it always comes from your own perspective, right?
It does come from, and sometimes people get very emotional very easily. They're moody some days they're not, and they're not as accepting of certain correspondence. So the key is be so very, very careful with how you communicate and who to. And that's not just business, that's personal as well, because of the way some people might interpret that information given how it was worded. And if you're upset about an email or correspondence, however that format comes across, if you're upset, give it some time. Don't reply immediately. Give it some time and cool down if you're upset.
Mm-hmm. Or, sometimes even what we've told other people too is, write it out, but don't send it. Just write it out on a scrap piece of paper and notepad, whatever the case may be, but don't send it.
Or even talk to somebody, and so that they can kind of relax you a little bit and get back to normal. And my final three pieces would be improve communication, continue education, because we never, ever stop learning, and attitude. Attitude has so much to do with life. Either you have a negative attitude or you got a positive attitude. Positive attitudes work in this world. Negative attitudes don't.
It's truly true. And, we did an interview a couple of weeks back with a fellow who's really he's got a lot of different designations. And that's, one of the things he emphasized too was continual education, because you're absolutely right. We never stop learning. And I'm really glad you brought that up about communication, because we've got an upcoming podcast with a communications expert. in not just in insurance, but she's helped out a number of different industries. So it just goes to show you like the importance of the right communication and making sure that your point is made, and how you read something and how you write something. And I like what you said before about knowing your audience. That's so important.
It's the same as you. You understand who your audience is, and you try to get speakers who can speak to that audience, who they need to hear, right?
Yeah, exactly. All right, so now the one I've been really excited about, the expert witness cases. Can you give us just, a brief bit of story behind that one and what that means?
So expert witness, I don't work for plaintiffs. I work for insurance companies, and if they need to rescind a policy contract and the beneficiary or the insured, depending on whether it's disability, critical illness, long-term care, or life insurance, if they disagree with that decision to rescind their policy or not pay benefits, then they'll see a lawyer, and the lawyer will then put forth their reasons for whatever they're looking for, whether it's the face amount being applied for. Quite often what we're seeing in the last 20, just over 20 years now, we're seeing many more aggravated and punitive charges against insurance companies as well. Now, that's first started with Lions and Canada Life, and I think that was back in 2000. That was our first punitive and aggravated charges. In the United States, it's much, much more frequent that you see those charges. And in Canada, they're not nearly as often, nor are the face amounts nearly as high, but they're starting to get a little bit higher over the years. And what, in effect, that means is that the insurance company was negligent in not allowing the claim benefits to be payable, and that they incorrectly decided to rescind or not pay claims. So there are many, many different situations that I've gone through. One example was an individual who apparently I say apparently because they never found the body, died in Mexico. And it just looked very, very questionable as to whether or not that individual's spouse was aware that the individual actually was dead or wasn't, because of the way that she communicated, it came across to the investigator as well as the RCMP. There was another case where an individual passed away. She died, and they later found that it was her husband and son who killed her, and they were the ones trying to get the money. There's another one where the individual was murdered in Mexico, and it was a professional slaying. The individuals worked for the Hells Angels and processed their drugs throughout Western North America. And one of the issues that insurance companies have is the cost. It's not just the clients who have issues with the cost of going through litigation. It's also insurance companies, because they can spend hundreds of thousands of dollars in court fees, lawyer fees, expert witness fees, although that's very, very minimal. So quite often they'll end up trying to negotiate a settlement outside of court just to save money.
Yeah, I can see why they would do that. That's fascinating. Not only have you demystified the role of the underwriter, but you've kind of glamorized it too. I know you didn't intend to, but boy, you've got some interesting things going on in the whole underwriting world.
Well, yeah, there's an awful, if I look at the last 5 to 10 years, the changes in underwriting tends to be very, very conservative, because insurance companies do. For another thing, though, that there's so much change required that I think that underwriting, for the first time since I've been into underwriting, is really starting to base a platform off of a much more an underutilized ability to be able to process business much more quickly. It's still not nowhere even close to perfect, not even close, but at least there's so many more cases that can get through so much more quickly than they used to. If you look at the average time it used to take life underwriting to process and decision a case, it was 30 days. For disability, it would be into the 40s. But today, I think it's reducing substantially because of the electronics and automatic underwriting. That's helped tremendously. That's not for all cases, but that's for a lot of cases.
Yeah, well, technology has come a long way to help that too. We had a conversation with somebody who owns a company that does e-signatures. And that's my understanding that insurance companies weren't keen up until this year on e-signatures, but they have embraced it a little bit more in 2020. So it's been, it's nice to see that insurance companies are making these changes as well. Well, I can't tell you how fascinating this conversation has been, Peter. Thank you again for joining us and clearing up what is the mystery that is underwriting for us. It's not a big black hole anymore. Peter, would you like to leave some contact information? If anybody has any questions for you, or they can send them through the website if you like. But do you have any?
Whatever's easiest for you. My email address is connect@peterspeers.com. Connect is with 2 N's. Peter Speers. Does everybody know how to spell my name, do you think?
Well, it'll be on the website, so.
Perfect.
Great.
So connect@peterspeers.com.
All right. Well, thank you again, Peter, for joining us. It was sure a pleasure talking to you today.
Well, thank you for inviting me, Darlene.
And we'll have all of Peter's contact information on the website if you have any questions for him, or you can also send your questions through us. And if you or someone you know would like to be a guest on this program, please drop us a line at contact@financialpodcast.ca. We'd love your feedback on our program, so leave a comment on the website and let us know what you think. And I hope you all have a wonderful day. Thank you again.
Take care.
The views expressed here are those of the participants and not those of Customplan Financial Advisors, Inc., its affiliates, or subsidiaries. This is not intended to serve as a complete analysis of every material fact regarding any company, industry, or security. This presentation may contain forward-looking statements. Investors are cautioned not to place undue reliance on such statements, as actual results could vary. This site and podcasts are for general information purposes only and does not constitute investment advice and is not intended as an endorsement of any specific investment product or service. Individual investors should consult with an investment professional about their personal situation. Past performance is not indicative of future results. If you are unsure about what is the best course of action for you in your financial planning, then we suggest you consult a fee-based independent financial advisor or get in touch with us to discuss your individual situation. Our phone number is 604-687-7773.